In today's video, we'll be shedding light on an important aspect of trading: the risks associated with using an expert advisor, also known as an EA. EAs have gained popularity in recent years, but it's crucial to understand the potential downsides before incorporating them into your trading strategy. So, let's dive right in. If you are new to the channel, subscribe so that you don't miss future videos. Also see the description box if you also want to download free Forex courses, books, and trading tools. Many people asked me about the broker that I use. See the link in the description box. On this channel, we share videos on how to make your own Forex trading robots. If you watch the videos on this channel, you learn that it is not too hard to turn your own Forex strategy into a Forex robot, and you can do it for free and without learning any coding. However, the point of this video is just to give you the other side. While these automated tools can seem appealing, it's important to understand their limitations. By the end of this video, you'll have a clearer picture of whether Forex trading robots are the right choice for you. Before we delve into the risks, let's quickly recap what an EA is. An expert advisor is an automated trading system designed to execute trades on your behalf. EAs are programmed with predefined rules and trading strategies based on historical market data. While they offer convenience and the potential for increased efficiency, there are risks that traders need to be aware of. Risk 1. Lack of profitability. One of the significant risks of using an EA is that it may not be profitable. EAs rely on historical data to execute trades, assuming that past market trends will continue in the future. However, the Forex market is dynamic, and trends can change rapidly. A strategy that was profitable in the past may not yield the same results in the current market conditions. It's essential to remember that an EA is only as good as the strategy it follows, and it cannot guarantee profits. Risk 2. Inability to adapt to market changes. Another risk associated with EAs is their potential inability to adapt to market changes. As we mentioned earlier, the Forex market is constantly evolving. New events, geopolitical developments, or economic indicators can significantly impact currency movements. If an EA is not equipped to analyze and adapt to these changes, it may fail to generate profits or even incur losses. This is why regular monitoring and adjustment of trading strategies is crucial, even when using automated systems. Risk 3. Cost. One of the significant downsides of Forex trading robots is their cost. These robots can range from a few $100s to several $1,000s. For some traders, this upfront investment may be a barrier to entry or add financial strain. It's important to carefully consider your budget and evaluate whether the potential benefits justify the expense. Risk 4. Amplified risk. Forex trading itself carries inherent risks, and using trading robots can amplify those risks. While these robots are designed to execute trades automatically based on predefined algorithms, they can't predict or adapt to every market situation. Their reliance on historical data and patterns may not account for unforeseen events, leading to potential losses. It's essential to recognize the increased risk associated with using Forex trading robots. Risk 5. Reliability. Another downside is the reliability of Forex trading robots. These automated systems are not infallible and can make mistakes. They rely on algorithms that may not always perform as expected. Moreover, there's the risk of hacking or technical glitches, which can compromise the accuracy and effectiveness of the robot. Traders should be cautious and regularly monitor the performance of their chosen robot to ensure its reliability. Risk 6. Usability. Forex trading robots can be challenging to use, especially for beginners. While they are designed to automate trading processes, understanding how to configure and optimize these robots can be complex. Some robots may require advanced technical knowledge or coding skills. Novice traders may find it overwhelming to navigate the intricate settings and parameters of these tools. It's crucial to carefully assess your skill level and determine whether you're prepared to handle the intricacies of using a Forex trading robot. While EAs can offer time-saving benefits and potentially improve trading performance, it's essential to approach them with caution. They are not infallible and can still incur losses. Understanding the risks involved is paramount to protect your capital. If you are considering using an EA, take the time to thoroughly research different systems, evaluate their track records, and assess their adaptability to changing market conditions. It's always wise to gain a deep understanding of how an EA works before entrusting it with your trading decisions. Thank you for watching, not a destination.